So I went to Zoom. They have an AI generator for backgrounds, for virtual backgrounds. And I typed Dubai. This is what it gave me.
Hey,
This is the AI version of Dubai.
the future is here now, my friend.
Welcome to the VC React podcast. Every week, we bring you insights and reactions from top VCs reacting to weekly news on startups, VC funds, and investment rounds. We have a great episode for you today with three wonderful VCs. Asher Siddiqui, General Partner at Sukna Ventures, Faris AlRashed, CEO at Sharaka, Tamer Salah, Managing Director at Beyond Capital. In the video description, you will find more details on our guests, their LinkedIn profiles, and links to their companies' websites. Our weekly news are brought to you by FWDstart, a twice-weekly newsletter that breaks down what's happening in the MENA, startup, VC, and tech space. And as always, from FWDstart, we have my co-host, Jamie Lin. What's happening this week, Jamie?
Yeah, plenty is happening. And if you're in Dubai at GITEX or North Star, it's mainly traffic that's happening. Unfortunately, I feel like
Yeah.
I spent more time in traffic than I did at any of the shows. Unfortunately, it's an absolute disaster.
You
But
know,
look,
and
I
I'm
mean,
driving. I rented a car here in Dubai, and if I take one wrong exit, that cost me 30 to 40 minutes.
oh, it's just been like I'm not entirely sure what the logic was of having both shows occur simultaneously, like 40 minutes away. But I mean, it's been tough. It's been tough.
They used to be the same show, and that was mayhem concentrated around the trade center. So the fact that they've split that actually honestly is fantastic. I and then what happens is nowadays people just pick GITEX or Expand, and they kind of stick to their knitting. It's an improvement. I'm hoping that they'll separate them further.
So let's kick off with SVC and Vision Ventures. So SVC, they've invested 15 million in Vision Ventures Soccer Fund 2, which is designed to support early stage startups in Saudi and across the wider MENA region, even as well. So the fund has a target of 90 million. It's going to focus on, as mentioned, early stage firms ranging from pre-seed to Series B. It's going to be sector agnostic. Startups that have already been backed via this fund to date include FaceKey, cybersecurity, Reva, Nearpay, and the Jerry, who we're going to be chatting a small bit about later on. And I suppose just to exemplify the diversity in terms of stages, like in terms of Nearpay, for example, there was a 3.6 million pre-Series A, which Vision Ventures led. And as it pertains to Reva then as well, obviously that was a 27 million round Series A that they participated in. Some context background of Vision Ventures itself. I'm going to butcher the names, my apologies. Haitham Bouasha and Kais Alassa. That's probably close enough approximation.
Qais Al-Isa.
Oh yeah, I'm gonna need to run this by before we start. Um, so founded the first one kicked off in 2018, and I guess a small bit about SVC then as well. Obviously, this 50 million investment is part of their investment in funds program. So the idea is obviously capitalizing VC activity regionally. So in terms of the first fund of Vision Ventures, I think it was around $25 million or so, and that backed in the region of about 43 startups as well. So yeah, that's the deal.
Great, thank you, Jamie. Great news for our friends at Vision Ventures. Congrats. And now let me ask you this to our guests. Historically speaking, pre-seed and seed funds in MENA, they're usually small funds, what's called the micro VC. This one is bigger. This is a $90 million fund. If you have that, how would you deploy it? I mean, would you invest in a big portfolio, say 100 companies, like the angel list model? Or would you focus on 20 companies, but keep doubling down on winners? Or maybe invest in mega seed rounds? How would you manage it?
So if I may start and not answer your question, but just reframe some comments, just because I think it's important that we sort of, provide some good context on the fund. So initially, I also thought that was like, wow, that's a pretty big pre-seed seed fund, as Ahmed, you said. But when I looked at the press release, they actually talk about a multi-stage strategy. So it's pre-seed seed, Series A, and pre-Series B. So the way I would categorize it, and I don't know anything about the fund, like the current portfolio construction of the fund, but my guess is that they're kind of sticking to their knittings in the sense that they're probably doing a similar size of deployment in the areas that they know, which is pre-seed, seed. And then what they're doing is they're allocating greater amounts of capital. I'm just assuming here. They're assuming, allocating greater amounts of capital in reserves for follow-ons at Series A and pre-Series B, where there is a capital shortage. Or they're just like, like how a lot of the big guys in the US are doing, which is they're just becoming a multi-stage firm, which also kind of makes sense. So I just wanted to contextualize that because, I think I'd love to have that conversation. Like, what would I do with a $90 million fund at pre-seed seed? But, I just wanted to make sure that we're not talking about Vision doing that because it doesn't sound like
exactly.
that's what they're doing.
Yes.
Yeah.
Let me stay with you for a second, Ashley. You've been in multiple VC funds. You advised multiple VC funds. You invested in VC funds. If you have those $90 million and you're dedicating it to seed stage, how would you do it?
Yeah. Okay. So first of all, if I had a $90 million seed fund in the MENA region, just, for context, that would scare me a lot. That would scare me immensely because that is a huge fund at this point in time. I believe that, first of all, I'm very happy to see Vision Ventures sort of raising this big fund. I'm actually more excited about what they're doing at A and pre-B because, that's really, really needed. In my mind, when you give money to a VC fund manager, you're giving them the capital to deploy because they have unique insights that, say, you as an LP may not have. And so what you're trying to do is you're saying, okay, try to help me capitalize on the opportunity. And the whole idea is like they are better at screening and selection. So if you give me a $90 million fund, seed fund, then I'm forced to make bets that I'm not convinced about, but because I've got this pressure of deploying so much capital, I may do that. And so my point is like, I'm not sure that's a great strategy. And of course, I don't want to upset anybody but those are just my opinions.
Yeah, of course.
But if I were to, say, okay, I have this $90 million fund, what I would do, I would probably do 75 to 100 pre-seed bets, very small checks. And then I would sort of, fill the stack. So I'd reserve capital and I write bigger checks at seed. And then I'd reserve even more capital and bigger checks at A. So that's kind of like, I guess, how I would construct it, which is, by the way,
it's like a funnel.
Vision has. It's a funnel. And it sounds like that's what Vision are doing. So I know it's not new, but I guess I would do what they're doing.
Yeah. Tamer, what would you do? You've invested, you're beyond capital. I think you're investing directly in companies and you invested in funds as well. So how would you do a $90 million seed fund?
It's actually a very interesting one. And I think I totally agree with Asher. And it seems that Vision Ventures also agrees with Asher, right?
Yeah.
I mean, it only makes sense to have a multi-stage kind of fund when you are in a small market such as MENA, and both sides of the equation aren't, in abundance, right? We don't have that many great startups popping up, and we don't have that many funds. Perhaps it's changing, and especially in Saudi Arabia, perhaps on the funding side. And so I would certainly bet on many with a portion of that, and then most of the funds will be deployed at later stages to increase our share or to increase the share in the company, the holding, and to maximize the returns off of that. And I believe many funds will start doing the multi-stage. I think this is the first time I hear of a pre-seed to B, right? Usually you hear pre-seed to A to C. It seems that it makes sense. I've seen some of the startups getting VC capital from early stage investors and getting stuck because their competitors have raised from the other VCs in the market. And you really run out of options, right? So you just want capital, you're doing very well. The other VCs would like you, but unfortunately they've invested in your competition. So someone needs to carry that flag forward. And the best bets are your actual funds. And it makes actually the offering of the fund more appealing to the startup, right? If I'm an early stage startup, I would do Vision Ventures knowing that they have deep pockets on multiple levels and lead rounds later on, they can participate. And that is the best message that I can give to other investors out there.
So it feels like, yeah, if I get into Vision Ventures, I'm good for life. They will take care of me until I get to Series B, kind of.
Well, pre-Series
Yeah,
B, so we
pre-Series
still need
B,
to solve
yeah.
yeah, we still need to solve the B problem, but at least they're helping, because I think the assumption they probably had was that at B, you've got sovereign wealth funds and you've got a lot of private equity and family offices that could sort of pile in. But that problem still needs to be solved.
Yeah, Faris, I refer to AngelList. You're one of the most active angel investors in MENA. And I refer to AngelList because there was a study done by AngelList that talks about angel portfolios and the returns they generate. The higher the number of companies in the portfolio, or the larger the portfolio, the higher the returns. And they say actually the optimum number is 100. So that's a big portfolio for a seed fund. But it seems that it's working. What do you think as an active angel investor and a VC now?
I think this is great. That what we seeing SVC when they start, they match 50% or 60% of the fund. Today we are seeing 15 and 10% of the fund coming from SVC. That's mean we have investor, we have institutional investor other than SVC is coming to the asset class of the venture capital asset class. And this is, I think, great news. And I agree with Asher and Tamer that it is first time we see that the fund is doing pre-seed to B. But I think what happens today in Saudi Arabia, most of the funds are early stage, and we don't have late stage. And I think our friends here, what they are doing is investing in early stage and follow in the late stage. When you have a small fund, you cannot, because you cannot do more than 20% of the fund, or it depends on the investment thesis, that you are doing 15 or 20% of the fund in one company. So if you put in one company and the company is going B and you want to follow, if you don't have a fund like this size, you cannot follow. If you have, let's say, if it's a 90, then what is the 20%? Say 14 million or $15 million. If you invest in early stage with $1 or $2, $3 million, then still you have 12 million to follow in the late stage. We don't have a late stage fund in Saudi Arabia. Most of the late stage rounds are closed by a single asset fund or international fund. So having a multi-stage like Vision, what they are doing today, maybe it will work, especially in Saudi Arabia, until we have a special late-stage fund. And as you know, a team of a pre-seed and seed is different than a late-stage team and a fund. So I think they will not invest be direct. They will follow because they don't have enough team to do a multi-stage investment. So investing in a company from 1 year to 5 or 6 years, then you follow, different than investing a first time in a B stage with a company you don't know.
Yeah, this is a really good segue for my next question. So you mentioned the lack of growth stage or late stage VC funds in the region. And in the region, we've seen SVC and Jeddah are leading the effort to create a vibrant VC and startup ecosystem here. And collectively mandated funds, they've seeded hundreds of VC funds so far, right? In the past 5 years. But my question is, what's missing? Other than maybe late stage VC funds, is there anything else missing that we want development funds to work on, or fund of funds to focus on right now?
I think they did a great job in early stage fund. They invested and matched with the early stage fund. In the coming years, I think they need to match also with the late stage. I think what's missing today is a secondary fund, because what happens today, angel investors are investing 10 years ago or 8 years ago, and they want to exit. Early stage fund, they want to exit. Employee, ESOPs, but we don't have a secondary fund. I think this is a great time to start something like this. The other thing is, I think if we want to do a venture capital, no bank will give us a loan, let's say for a fund. If I want to have $50 million a fund, can I have a 20 million loan from not a venture debt? This is a different product.
Oh, you mean for the fund itself? So you raise $30 million from LPs and then $20 million from a bank. That's a total of $50 million fund. And then you want to invest that capital. Okay.
We don't have a product like this today. And I don't think banks or even government, they will do some. But when you go to SVC or JADA, I think they understand. But they did, I think, only equity. So they don't do equity and debt.
Okay, so late stage capital, secondaries, and leveraged funds. Asher, what else are we missing?
So look, I mean, we're early in our development of the ecosystem, so it's early days. I think what SVC and JADA have done really, really well has developed the early, as Faris was saying, the early stage venture landscape. So we have lots of early stage funds. What I like about our partnership with SVC and JADA is that they actually do listen, and it's like a two-way street. So, we raise concerns, and not just us, but a lot of our peers at the early stage raise concerns about, isn't this too much capital that's going in? I mean, it's good to have competition, but also if you're flooding the early stage with too much capital, isn't that going to lead to frothy valuations and things like that? So we shared those concerns, and they listened, and then they started working on a growth stage. So they are actually, they're shifting their strategy as they see that the market is changing. At least that's what they're telling us. And so they're now spending a lot more time with growth stage firms and later stage firms to see if there's any that they could back there. They're also looking at secondaries. They're also looking at these sort of, I actually think that you do need a full stack, but this takes time. Secondaries is, I'm a big fan of secondaries, and my old boss runs a secondaries funds, and I'm an LP in it, so, and a happy one given the return. So yeah, so I think, yes, secondaries is something that needs to be solved. Also, working capital facilities for venture funds, that needs to be solved. There's always this delay with capital calls and stuff. So there's a lot of infrastructure that needs to be built, and new sort of sub classes that need to be backed. But yeah, I think that the biggest problem or pain point right now to me is just thinking directly right now, because we can have secondaries, we can have all of these things, but if we don't fix the growth stage, like Series B and C, what will happen is that we are going to invest in great companies at the early stage, and then those companies are going to struggle to raise money. And then what will happen is we're not going to have the winners. And so the point is, like, this market needs winners to show that money can be made and expansion, new economies can be built, and so that more capital will flow. And so, I think that's kind of like what's the other thing. Sorry, just one last point, which I was actually quite happy and pleased about, is one of the feedback that we gave to our LPs was, early stage, this is great. How about you start building relationships with global VCs? And I know that, people, when I say this, people want to kill me because they're like, why are you making, putting our money out? Because there's plenty of money that's going outside. But what I'm saying is, like, giving capital to global VCs and building relationships with them has paid dividends. So, I have a personal LP portfolio. I've leveraged my personal portfolio, my LP portfolio, to build relationships for my portfolio companies, to build relationships with Silicon Valley VCs. And that's super, super helpful. Like, and SVC is now doing that as well. It seems that they're building relationships. This is super helpful because, we're small funds. Seed funds in other parts of the world are bigger. And Series A funds that provide sort of global foreign validation is super helpful. I mean, it will take time, but that's kind of like.
You want SVC to invest in global VC funds. I think there is another section under PIF, which is Sanabel, that invest. I think they invested already in 35
they do.
US VC funds. But you want SVC to also focus on that, or maybe they both talk with each other and share connections.
The thing is, Sanabel is not a developmental fund, right? They're financial returns focused. So that's kind of what they're doing. And I think that there are some relationships that they're building that have proved good for our ecosystem. But SVC are more developmental focused, ecosystem focused. So that's why I think that there is this need for partnerships, and we've seen that in Bahrain. By the way, Bahrain is they had a fund of fund, I think, that invest globally as well, and we saw some of those people sort of coming into our ecosystem as well. So
I think, later stage funds, we need two things. First of all, we need the pipeline. How many late stage companies do we have in the region, or what we call growth stage, or for those funds to have a proper pipeline to look at? That's maybe number one, and I think that will evolve from the early stage investors will become later stage investors as they learn how to do it with their successes, right? If they're successful Series A investors, they would learn from other investors that come after them. They would see companies grow. They would understand that asset better, and I believe they would evolve, given that they would be able to raise more money on their previous successes to handle kind of a bigger fund that invests in later stage. But the other thing, and I think is perhaps more important, we need more and bigger success stories, right? We need to see, if you're a later stage fund, you would certainly enter at very high valuations. And if you are already at a very high valuation, where would the exit be? We did not have that many billion-dollar plus exits, right? And if I'm investing at hundreds of millions of valuations, then I should be expecting those companies to scale and to exit at such values. Now we're seeing a lot of movement in the space. We're seeing, the IPO markets getting a little bit more mature, but we need multiple Kareems and perhaps even more than Kareems, right? We want to see more of those unicorns, decacorns even, just one decacorn will change the MENA region, I guess, right? At least the way that VCs would look at it. To be able to invest at those stages, you need to justify that on paper and to justify the multiples and the risk that you're taking with it. And I believe that will certainly happen. It just needs a little bit of time. And maybe the last thing is other sources of finance as well would be needed at later stages, not only VC. And VC alone or equity kind of investments alone wouldn't be enough for those growth stage companies, perhaps to grow to become the unicorns and the decacorns that I'm talking about. So I guess, and we're seeing that already. More venture debt is happening, more debt components, more debt products going on for those companies who have probably been diluted enough or been lost a lot of equity to get there and don't want to lose more of that. So I think there are multiple components and they're currently being built each in a silo, but eventually it will certainly happen. All of us here need to believe that it will happen, what we are all optimistic about, I guess.
I think what happens with Kareem in 2018 or 19, it was the first unicorn in Middle East. Let's be realistic. We just started. The ecosystem, I remember when we started the Uqal 2010 or 2011, no one was talking about venture capital fund or even all these products and the government, what's happening now with the region. So the first unicorn was in that time before Corona. After Corona, everything was it's different. The good thing also was SVC started Jeddah also before Corona, so they invested in funds, and we were one of the first funds to SVC is investing with us, and we deploy before Corona, and we deploy after Corona with some of the companies. And what we saw last year, first unicorn in Saudi Arabia, Tamer. This is also something that we just started to see the first unicorn. When you see the first unicorn, hopefully these fund and the LP will understand that there is a market. Because before you cannot convince an LP in a Middle East, you said, okay, there is a unicorn in the Middle East. There wasn't a unicorn in the Middle East. Now we can see it in Middle East, in Saudi Arabia, and another country in the Middle East. Hopefully, in the future, we will see more every year.
And hopefully this cycle will keep going, because since 2000, I think 2002, 2003, We've seen multiple cycles in the region, started by Arabia.com, if you remember the stories of Arabia, and then N2V, and the stories of course, Oasis 500. And we've had ups and downs in the market, like any other market, of course. And I hope this run keeps going until we have lots of IPOs, tech IPOs. Anyway, Jamie, please take us to the next story. We can talk about funds for the rest of the day. Let's move on to the next one, please.
Yeah, to break it up a small bit, talking about buy now, pay later unicorns. Could we have a rent now, pay later unicorn in due course, potentially? So with Jerry, they're a Saudi prop tech. They've disclosed a $14.65 million seed round. So it's consisting of a mix of debt and equity. In terms of lead investors there, you have Partners for Growth, Beko Capital, Seed, Real Ventures, Alma Bank, Vision Ventures, we were just chatting about, and a car platform. I think they're one of the biggest real estate platforms in Saudi, to the best of my knowledge. So, and they also had participation of existing investor Salah Investments RX Fund, who led the pre-seed back, I think it was October 2023. So the startup itself, founded back in 2022, provides a rent now, pay later solution. So essentially allows tenants to pay them rent monthly instead of annually or biannually, which is generally the norm in Saudi. I think it's somewhere in the region of kind of over 70% of rentals require upfront annual payment. So in terms of the business model, screens tenants for creditworthiness, pays landlord 1 year's rent upfront, and re-rents the unit to the tenant on a monthly basis. The platform, it did charge, the last time I checked, this was back in, I think, February, is about approximately 15% of the total rent as a fee. In the past 6 months, they generated over 30 million in demand for the service, operating now in 17 cities across 8 different regions. At the moment, I think they're concentrating purely on residential, but I do know that CEO has mentioned that they're looking potentially at expanding into commercial retail and industrial centres in the future as well. And, you know, regional expansion could be on the cards too.
So I have 2 main questions on this story. One about the business model of the rent now, pay later. What do you think about the model? How is it scalable in Saudi and maybe in other countries in the region? And the second one is, again, back to seed. The seed definition. Can we define or redefine what a seed stage is? Because this is a $14 million seed round. And I know it's not typical. It's a mix of debt and equity, which is something new as well that I see on a seed stage company. Any comments on the size of the round, the mix of debt and equity? And then if you can comment on the business model itself and the scalability of this.
Yeah, I can jump in very quickly there. For the size of the round, I think, you know, fintech is giving us those big rounds since we have seen them start in this region, right? All of the seed and pre-seed even rounds are big rounds, given that they would need to burn a lot of capital along the way to reach where they want to reach. And I guess that just makes sense. I have, you know, a lot to say about valuations and the overvalued valuations in the region and so on, but I would leave that to a later discussion. As for the model, I believe, you know, I don't know much about it, to be honest. However, it just makes sense to me, right? I mean, it makes sense to me as a person, as a homeowner, as someone who would move around and rent places. It just makes sense not to kill your cash flow as a family. So it seems that it makes perfect sense. It seems that those guys have proved that their model works in multiple cities in Saudi Arabia, and it's a real problem that needs to be solved. I don't know if this is the best approach or not. I don't know what their model looks like, but when you know, the first thing that came to mind when I read this is, okay, now it's a matter of 2 things for the business model, right? At least to me, the cost of finance and the risk management of that capital. So given that they have convinced great investors to come on board and they have that capital that came about, I guess it seems that they're getting there, and the unit economics would make sense, and it would be still feasible for those who are seeking that rent now, pay later kind of offering.
So 2 things here on the business model. Then they charge 15%. Jamie, you mentioned they charge 15%. I wonder how much are they taking the debt facility for? Is it 10, 12? I don't know, or 8 maybe, and they make that difference. Asher, what do you think? The business model and the size and the mix of equity plus debt and the seed round.
Yeah, so I mean, it's an unusual seed round, right? So that's not a typical seed round. That's kind of stating the obvious. In terms of the business model, I feel like it sounds like they're solving a problem. Like the rent now, pay later is not really representative of what they're actually doing. I think that's just marketing. And that was actually confusing marketing, if anything else. So yeah, it seems like they're just allowing people to sort of ease off that wonky cash flow situation that they have with, 1 to 2 to 4 checks. My question is whether, like while they're solving a problem, can this solution scale? Because it sounds like you need to have capital. I mean, Tamer was absolutely right. That's kind of like their model, right? Like they need to have risk management and they need to have capital that they're charging. And then there's this whole model around it. Seems expensive. I mean, seems like while they may get some market, I think that there's so many other alternative solutions for people available to get lower cost loans and figure out rent that way. I'm I just don't really understand it. I don't know the business well enough. I'm just concerned about high interest cost debt loaded up on families. I mean, so this is a general thing on BNPL and these types of things. I just wonder, and this is not a venture thing, this is a philosophical, I kind of worry about an economy, loading up an economy with high cost debt. That's just dangerous. And that's just going to lead to all sorts of problems, for families and for the economy. Honestly, I personally stayed out of the entire space because I think that I'm not sure. I'm not convinced that it's going to end well.
Okay.
But I'm sure this company will do well, and
Yeah, if you allow me just on that, I was actually thinking about that before, and it's so convenient to use all of those debt products. Like every time I use my credit card, I receive an SMS. Do you want to, just pay $5 and pay it over in the next year and so on. And the thing is, it's so convenient, it's so easy, and it seems that it's solving a problem for you. But the problem with consumers is that we tend to fall into the trap of, okay, then I can buy all of those things. But
then accumulate debts over and over again, and then you get into that debt trap.
One hiccup, you fall into that trap, and you start, those collectors would come knocking on your doors, and the penalties of late payments and defaults will accumulate, and it will become very difficult. And actually, this is a problem globally, right? People would easily fall into those traps, and especially when it's a new kind of, the fintech kind of thing. It's not a bank that will scrutinize you to the core. The whole point of it is, is an easier way to do the credit history and all of that. And most of us will fall into that trap because our lives will get better. So
from an impact perspective, you kind of, Asher and Tamer, you kind of disagree with the investment thesis. Yeah.
Not necessarily, really, because I think it's amazing, right? It's amazing for someone to give me that power to buy something that I couldn't have bought before, or to live in a house that I couldn't have afforded, or buy a phone, or whatever it is. But the problem is that I, as a consumer, would perhaps need someone to tell me what I'm getting myself into, other than the fluff of the sales pitch, right? So sorry, I think we deviated a bit on the business model.
No.
Yet it's highly impactful. So I really don't know what my thinking is. I would love to see those products, but I would also love to save that consumer from falling into that trap.
Tamer mirrors my thoughts. So just to be clear, I think that's basically it. There's this conflict where it's like fintech growth in the asset class, and then this problem, and that's pretty much it. So I'm like a bystander. I passed on the deal. So
Faris, overall, what do you think? And would you invest in a $14 million seed round?
As they said, this is the first time we saw a seed round with this size. But I think because it's more of debt and equity. But I agree with you, and I had the same thing with Tamara and Tabi. when I had them from the first meeting 4 years ago. It seems that, especially a father of kids, and you know what will happen. It will lead them to consume more, because, and this is, I don't think it's good for the community. You are helping something, but you are hitting other things. So it's, let's say, again, I'm sure they are doing great, but I'm not a fan of investing my money in something like this. It looks like they are solving problem, but what's the size of this problem? What's the market size? Real estate in Saudi Arabia, especially the new authority, this is a new authority in our country. And PropTech, this is one of the first PropTech that authorized from this regulator. Comparing a fintech company having a license from a central bank with a company having a license from a real estate authority, you cannot compare the quality of the license, the quality of the follow up with the company. So it's something new. This is a new license. When we met them and they said we don't have a license from SAMA, it was how the buy now pay later they have license from SAMA, and rent they don't have a license from SAMA. They have only a license from real estate authority, and which is difficult for me to understand, because they are working with rent, with money. They have.
Yeah. It's a financial technology company, and they're lending money. It's a lending product, so it has to be licensed. Okay, so we will stay in payments, but this time for a company that manages collections for SMEs, not for consumers. Jamie, what's the third story for us today?
Yeah, I won't spend too long introducing, so I probably should defer to Asher on this, considering I know
yes,
we're involved.
Sukna Ventures invested. I don't know, Asher, if you were involved in that deal, but Sukna invested in this company.
But it's super exciting, and it's funny because I know the founder John has adopted something of an unconventional approach from a regional perspective in terms of that he's built in public since the beginning. So I've been following him on LinkedIn since last October. So I feel personally invested nearly in Octa, because we're getting periodic updates the entire way through. So it's been a really interesting approach for him to do that. So I feel like I followed him the entire way. I think they took part in 500 Global's accelerator and all the way up until the announcement last week. It's not his first rodeo either. He had a previous startup called Denari. They were acquired back in 2022, I want to say, by Kareem. So that was a money transfer platform, so facilitated international remittances, which was pretty interesting. So I'd imagine that went into Kareem Pay and that the super app that they're now building with E15. But in terms of Okta, so they closed a 2.25 million pre-seed round. So they're going to be automating accounts receivable for SMEs. As in terms of what they do, so helping businesses manage cash flow more effectively. So invoicing, pay reminders, follow-ups, syncs with accounting software. So they facilitated 28 million, I believe, in receivables for clients like Kareem, Lean Technologies, and Money Hash. In terms of what's on the cards for future, then hopefully expanding to the Saudi market and other Middle East countries in due course. But yeah, super exciting, and massive congrats to John and all the team.
Asher, were you involved in the deal?
Sure, I led the deal. I've known John since he was running or sort of building Denari Cash. So it was a long time ago, and I was impressed, and we sort of maintained our sort of relationship. And so I'm actually quite excited about what they're building. I think what they're building today isn't what they're building in the longer term, but this is kind of like the approach that they have is I think what excites me. So we were actually the first investor. So John was raising an angel round. I mean, ultimately, we're in the business of backing founders, people, right? So we loved what he was doing. So we were actually the first check-in. So like, I know that it's one round, but that's just, for marketing purposes, I think it made sense. But Sukna was a proud first institutional investor in the firm.
Do you want to challenge Asher into why did you invest in this company? Do you have a different opinion? Do you disagree with this, with their decision to invest in this company?
All right. Yeah. So it seems like an expensive deal. It seems like a pre-seed high valuation. But when you look at the team and the experience of the team, at least on paper, I don't know them, but they seem brilliant. And this is where when we spoke about the high valuations and the overvalued companies in the region, as a pre-seed investor, when we look at an expensive deal, now not all of them can pass as expensive deals, right? But some of them would actually stand out and would show you that this is the cheapest that you will ever see this deal coming through. Whether it's expensive or not, it is the cheapest today. And if you pass on it today, the only way you can get into such a great deal with such a great team is on a higher valuation. And so from the surface there, I don't know much about the company. I don't know much about the founders. It seems like they're a stellar team coming together, building something that is super interesting, obviously highly ambitious, building a global company out of the region. At least that's what they want. Whether they will be able to or not is another story. And this is where I would say valuations don't matter much. Yet this kind of valuation at the pre-seed is actually contagious to other founders, and all other founders will come in and say, well, they raised, but they don't live
at X or Y. Why don't I get that high valuation?
And
Yeah,
it's
exactly.
the most difficult thing to tell an entrepreneur, well, I mean, look at the all-star founders there, for example, or look at what they've done. And those new founders or first-time founders will come to you and tell you, well, I was a CEO of this big insurance company or this bank. Are you comparing me to young guys who just built products before? And it's very difficult to convince those guys that, yes, but the story aligns, right? We see a lot of startups just comparing themselves at pre-seed and seed with Europeans and Americans. And similar company in the US raised at 50 million pre-seed. Well, the potential in the US is different. We don't have a Google in the region. We don't have any of those trillion-dollar companies or hundreds of billions of dollars of companies.
Tamer, I want to challenge that, actually. I want to challenge that because I wrote a blog post a few days ago. I called it, we're not local players anymore. We are global players. We are global VCs and founders. We just happen to call MENA home. But before I talk about this and ask you and Asher about this, Faris, what do you think about this deal?
And I think we saw a serial entrepreneur who started, as Asher shared, who started 6 years ago or 5 years, and they succeed in their first company, and now they are coming with a new venture. Having these serial entrepreneur, it's very good for us as a venture capital. It's make it easier to decide to go ahead and invest with them. And normally early stage it's about the people, it's about the team. Yes, there is a valuation, and the valuation is a range. It's you as a fund manager, you have a range of the valuation. And I think we saw at this time people who are trying to solve the cash flow from account receivable and account payable, and I think this is something new in the region. Yes, there is a global player, but I think this is something new in the region. And I'm sure that when they solve automation, solving a cash flow for a small and medium company, will help a lot. And I think there is a big market, and we saw the big market for peer-to-peer lending. I'm early investor in Lindo, and we saw the growth of the market. We saw the growth of so helping an account receivable like this. Also, there is a big market. Hopefully, we'll see them in our way, because we are a fund seed. We don't invest in pre-seed. Unfortunately, we couldn't invest in them, but hopefully in the future we'll see them and the next year.
Just to react to the valuation, I think there's an assumption that the round raised leads to an expensive valuation, and I think that's why I was kind of providing context in the sense that this was not a single round of 2.25. It was just like they hadn't told the market that they'd raised, so they built in stealth. They bootstrapped. They built the product. They got traction. They got paid customers. They started talking to angels. They started talking to me as an angel, saying, hey, Asher, as an advisor, like, how do I build towards where I can talk to you. And because I'm greedy and because I'm price sensitive, we decided to just go in at the angel round because, you know, it kind of made sense. And obviously, I'm very happy because I've been validated, or we've been validated by, you know, Kona and Sadhu, who came in this round. And of course, we're happy to have them lead this because, you know, that's there. But, you know, if you stack that out, then actually it's in line with the market sort of valuation. And to be honest, I think that it's a very attractive valuation for investors coming in today that are into founders that are building a global company. And you know, like there's a lot of things that I can talk about there, but you know, one of the benefits of living in the Bay Area and being here is that I'm able to sort of see what you know, global maxim looks like, what good looks like, and then push my founders to make sure that they're not settling for local or regional maxim. And so, you know, when you think about how he started, John, his co-founder, he thought of, okay, is this person global level? And when they looked for their CTO, they looked globally, and they found a serial founder who was you know, a rock star CTO. So like the idea is like if you have that in mind, then you build a global company. So I agree with you, Ahmed. I think you were kind of saying,
I love that.
You know,
Yeah.
you can in this world post-COVID, in this distributed world. I do think that there are challenges with that model because obviously distributed models, it's hard to build culture. I agree, but just to get from 0 to 1, I think you can build a rock star stellar team from Dubai and from, say, Georgia or wherever. You can just get a team there. But obviously, like when it comes to scaling, that's a different story altogether.
The difference I was talking about, it's more about the mentality of the founders and the investors. I'm solving a local problem that can be expanded to different markets, but I'm not a local company. If you think of yourself as a local company, I think you've lost already. You've lost to all of the international companies that will come and invade your market. They will come anyway, whether you rock it or not. Tamer, back to you on the global versus local.
Yeah, I mean, I totally agree that you need to build a global company from day one, or perhaps at least not a hyper local company, at least to have a sizable market, right? But I still believe, and we do live in a global, you know, world today and all of that, but we still are at a disadvantage in this region compared to other regions, especially in the US, when it comes to building a global company, right? First of all,
for sure,
they can access 350 million people in one country, right? They can prove, they can scale, they have capital availability, they have a lot of support going on. There is that community, the adoption rates, all of those things play a huge role in getting them to prove that their model works before expanding elsewhere. And their local home market is 350 million people. Our local home market, the biggest, perhaps is Saudi, Egypt, and they're still tiny, right, compared to that big of a market. So for us, if you want to build a global market, a global product, I would either, you know, start in a market that would potentially get me to that stage where I would be globally relevant and appealing to others before, because a company solving an issue in Saudi Arabia today, even if it works globally, there is a lot to do to get visibility to becoming a global company versus a company in the US just covering the US market. Even part of the US market, it will become globally relevant from day one. So I'm not against scaling globally from the region. I think it can happen, and it probably happened, but it would be difficult. And also it depends on your business model, right? If you can achieve a seamless kind of selling all over the world seamlessly, it might work. But usually that only comes after you raised and you get your product
multiple rounds.
You really, you know, start in the, you know, you become efficient, and this is when you can really become globally relevant. So I'm not against it, but I'm against comparing ourselves to them at the earlier stages, even at the later stages, and, you know, apples to apples, and not applying those massive discounts that need to be applied.
Yeah, so Tamer, I completely agree with you that, you know, like I think caution is very important, because I think the problem is that when people make generalized statements, then those generalized statements are extrapolated and then they go beyond. So I completely agree with you. I think nuance is very important. So I appreciate your nuance, and I agree with you this is a local, regional, like we shouldn't be comparing this region to that region because that's apples and oranges. But I think that, it's so complex, right? So there are local companies that are solving local problems. There are regional companies that are solving regional problems. And then there are some of those companies that are solving local or regional that also could translate into global solutions. And so, and I think that we have to have that lens there. So like when it's a local or regional problem, then the valuation sort of ties into that, right? And I completely agree. And I also agree that if you're a global first company, but you're solving a local regional problem first, which obviously you should be doing, then first you need to prove that that you can actually solve it here before you go somewhere else. But there are examples where things happen in a strange way and they're in a different way. So for example, we invested in a company called Anecdote, and they're like super early pre-seed company. They're from the region. They came out of the Kareem data science team. And then, they went to the US and they picked up Grubhub and OpenAI as customers. And this is like a pre-seed company. So, so I think that now what we're trying to figure out is, okay, where do they belong and where are they? They're still doing business in Saudi. They're solving problems in UAE. They're solving problems for local regional companies, but they're also solving global. It is challenging. I completely agree with you. But I'm just saying, like, it is there. But you're right. With the greater potential of being a global company comes greater complexity and greater risk. And I couldn't disagree with you more on that.
Okay.
Sorry, agree with you more on that.
Oh, okay.
Sorry, agree.
I wanted to be the evil one and be happy for disagreement. Okay.
No.
Okay. Well, with this, Asher, Faris, Tamer, thank you so much for joining us today. You've been very generous with your time. Thank you so much. And from the AI version of Dubai, thank you for all of our listeners and watchers. I will see you next week.